Most traders backtest a strategy, see good results, go live, and then fucking blow their account. Why? Because nobody teaches you what to do after backtesting. They show you how to test strategies, but not how to actually implement them profitably. You see, I've taken over 10,000 backtested trades and turned them into over $300,000 in actual funded account profits. In this video, I'm revealing the exact process, how to monitor if your live trading matches your backtest, when to scale up your risk, and how long it goes from testing to consistent payouts. This is the missing piece between having data and getting consistent profits. Without this system, your backtesting is just expensive practice. With it, you'll know exactly how to take your numbers and turn it into real profits. So watch this video till the end without skipping anything. Let me start off by telling you what, well, nobody really tells you. Having the right backtesting results is only really 30% of the equation. So let me show you what really matters. The backtesting to live trading gap is a real thing. This is where trading psychology really comes in and where you'll start to actually see issues that you didn't see in your backtest. Or the issues you might have seen in your backtest that you kind of thought, meh, they start to become real problems. Now guys, the reason why live trading is so different to backtesting is because backtesting, all right, right here, backtesting, I love the way I write, it's totally understandable, understandable. Yeah, it's legible, very legible. Backtesting is not the same to live trading. Now, why is that? Why is backtesting so different to live trading? The main reason is very simple, guys. And it's unfortunate. It's just that over here, there is no psychology, okay? Why is there no psychology? Because there's no real risk. The only risk you have is whatever you're paying for FX replay or whatever you've invested in terms of time to backtesting your shit. So that is why there's a big difference between backtesting and live trading. That's why you might be in a situation where, like a lot of people that I've heard, and like I mentioned in my backtesting video, which I'd really recommend you watch if you haven't already, because it's the video which is before this one. Anyways, what I talk about in this is that a lot of people tell me that, well, Seb, I backtested. I put in 100 hours, I backtested 300 trades, I got a 70% win rate. All right, I should be chilling. And then I went live and I did not get the same results, okay? Didn't get the same results at all. Why didn't they get the same results? Very simple, because of psychology. And not only that, but because they didn't really backtest properly. That's why I'm saying backtesting, gathering the data, is only about 30% of the equation. It's important to actually be gathering the data efficiently and for a good reason, or else you're not actually going to be getting any good results from it. The whole point of gathering the data is for you to actually be able to utilize it to, in a way, know what's gonna happen when you go live, so that you have more confidence and your psychology is no longer fucked. Because what is psychology, guys? 70% of trading psychology really is just a lack of data or a lack of trust in yourself and your data. How do you trust yourself more and trust your data more? By having accurate data that you know what's actually going to be giving you, right? Whenever you're actually going live. I'm gonna be going over that in a minute. I'm gonna be going over little examples on my whiteboard. So stay tuned for that. Also, another thing for me to cover before I go into the next point, one big thing that a lot of people go through, unfortunately, is they backtest, they get really, really good results. And I don't have an eraser, by the way. I forgot to buy one, so I have paper towels. Anyways, what happens to a lot of people is, simply put, they backtest, they get incredibly good results. And then what are they thinking? They're thinking, oh my God, I'm the GOAT. My results are the best. You know, I got this. Like, I'm just gonna go ahead and live trade. I'm gonna full port every single eval that I buy. I'm gonna full port my whole personal account on my brokerage. I'm gonna be fucking rich. Psych. That's not gonna happen because of psychology. So whenever you go live, you can't just be going in with like insane amounts of risk. You need to be going in with low amounts of risk. Why? You still need to gain confidence in the live markets. And you may be telling me, Sabs, I've been trading for a while. I don't think I need no confidence in the live markets. I've been trading the live markets. Well, why are you watching this video, bro? I mean, if you're watching this video and you're already at your goals, if you're already making what you want from trading, if you're really satisfied with it, then you wouldn't be here. Okay, you're most likely have been trading for a little while, haven't really gotten the results that you want, and that's why you're here. That's why I'm making my videos, to help people like you, which are either new to trading or have been trying to trade for a while but haven't gotten the results that they want. Because I've been doing this for a long time and I fucking love what I do, and this is all I want to talk about all the time. So I love having a little platform I can talk to you guys. Anyways, if you have any specific questions, just DM me on IG. The link should be in the description. I'll gladly help all of you guys out, or else why would I be making these fucking videos? But here's the thing, backtesting isn't just about finding a profitable strategy. It's about building a system that you can actually execute. That's the most important thing, or else, guess what? Whatever you do in the backtesting stage is not going to actually translate. The most simple example is gonna be this, guys. Most simple example, all right? Let's say that you, my friend, are a 9 a.m. to 5 p.m. worker. In other words, you are like a majority of the population. You're working 9 to 5. This means that you are available before 9 a.m. or after 5 p.m. right? So this is when you're going to be available right here and over here. But over here, not really. Most of you you know, we'll probably not be able to do anything between 9 a.m. to 5 p.m. Maybe you'll be able to check your phone for, you know, here and there, maybe during your lunch break. Maybe you'll be able to do a little bit of checking your phone, clicking some messages, whatever. And if you can do that, congratulations, you can actually trade during the 9 a.m. to 5 p.m. mark, because whether you're scalping, day trading, or swing trading, like I mentioned before in my live backtesting video, or in the backtesting video, and also in the other videos that I made before this on my YouTube, what I was talking about is that you can actually scalp even if you have a 9 to 5 during your 9 to 5. I'm not saying look, if you're a boss, chill out, chill out. I'm not saying that you should be staring at your computer, not doing your work, and just like staring at the candlesticks trying to take a million trades. What I am saying is you should be doing your job, okay? Make sure that you're doing your job properly. Be a good employee, like be a good human, like be reasonable. They are paying you for your time for a reason. So of course do your job, but here's the thing. If you have the right to just check your phone, check, you know, your charts, right, on the work computer or from your personal computer or just from your phone, you are able to scalp. What I mean is you can set up your trading view alerts for whenever you have a potential setup, whether it's at 9 a.m., 3 p.m., whatever, at any time. And then you just go ahead and wait for your setup to give you an entry. You click the entry button, buy, sell, set up your stop loss, take profit, your risk management, whatever. I have systems to make that a lot easier. In case you're thinking, Seb, it takes me 5 minutes to set all that up. It only really needs to take a few seconds if you prepare ahead of time and you have the right systems. But anyways, all you need to do is just take a couple seconds, you click on the button, and you forget you even did that. And whenever you're done your work, after 5 p.m. over here, then you're actually able to journal. All right, that was a bit of a tangent. What I wanted to say over here is that if you're working in 9 to 5 and you are back testing a strategy, okay? Let's say you're working in, I have a lot of clients which do data analysis and data security, really like high level like data security jobs, which you get access to data, which you cannot be sharing with anybody. In other words, if you're gonna be doing that, they will not allow you to have your phone, internet connection, or anything while you're at work, because you could be leaking secrets. So you cannot work during 9 to 5. If this is your situation, you cannot work during 9 to 5, and what I just mentioned does not work for you, then why the fuck would you backtest a strategy which is during those hours? Why would you do that? It makes literally no fucking sense, but some of you will. Or let's say that you wake up at, I don't know, 7 a.m. and then sleep at 10 p.m., all right? If this is you waking up at 7 a.m. and going to sleep at 10 p.m., why the fuck are you backtesting a session that is when you're asleep? My boy, read this again. Why, bro? Think. If you are an EST, okay? And this is an EST, let's just say EST, Eastern Standard Time, the time of New York. If you are an EST and you are backtesting a London strategy, you are mentally fucking fucked. Unless for some reason you're like, whatever, you can stay up that late and it's just ideal for you, but I really doubt it, because humans are not meant to be nocturnal to the point where they're up all night, all right? It's 2 a.m. to 5 a.m., the London kill zone, and that's just not a very good time to be awake trying to make very, very serious financial decisions for multiple years on end. You are setting yourself up for failure. Find a time that's going to work well for your life. If it doesn't work well for your life, then what the fuck are you doing, bro? Like, don't try to take trades throughout the whole day where it requires you to be like super locked in and scalping and taking all this risk if you're the kind of person that doesn't even like that. Like I said in the backtesting video, make the strategy work for you. You need to build yourself a plan that actually makes sense for your life, okay? In other words, whenever you backtest, okay, backtest, you need to include many things. So it needs to work for your life, because it doesn't work for your life, there's no fucking point, okay? It needs to have good data, because with bad data, well, just keep refining, of course, but whenever you finish your backtest, like the goals you need to have from your backtest is good data. You need to make sure that it's going to work well for your psychology. There you go. What do I mean by that? It could be that you aim for a higher win rate instead of higher risk to reward, because risk to reward is something that needs to be balanced out well. If you have a risk to reward of like 1 to 1, it's going to work, of course. There's plenty of traders that make it work, or even 0.5 to 1. The problem is, whenever you get 3 losing trades in a row, your mind is going to think, fuck, I need to get 3 winning trades in a row to make it all back. And then it's going to be, I just feel pressure saying that personally. And so, at least for me, for some of you it might not be a big deal, but at least for me, I prefer having a positive risk to reward, ideally above a 2 to 1 risk to reward, because if I got 3 losing trades in a row, all I need is 2 winning trades and I'm in profit. In other words, it's not 3 for me to get back break even, it's just 2 and I'm in profit. And so that's why I prefer having a positive risk to reward. But when I said positive risk to reward, I don't mean like a 8 to 1, 10 to 1, 20 to 1, 50 to 1 if you're a Twitter crazy schizophrenic fanatic. Because the problem is, guys, look, here's the thing with risk to reward, okay? Let's say that you were to take a trade that's a 1 to 1. This is basically what you're gonna be looking at. This is your entry, this is your stop loss, this is your take profit for a long. It's all going to be an equal size, okay? So you're going to have over here the same kind of distance, right? You're going to have yourself let's say a $10 difference, right? $10 difference over here from your entry down to your stop loss, your take profit, right? So price over here could be at 100, this is 110, and this is 90. What is the probability of price going from 100 down to 90, or from 100 up to 110? What's the probability? It should be about 50-50, right? Because you're basically expecting the same move to either direction. Now, it's not exactly 50-50, obviously, because if you're in a strong uptrend, right? Let's say that over here, you guys get the idea. Over here, you have like this as the chart. We're clearly going in a big uptrend. Obviously, there's going to be a higher probability that you are going to hit your take profit because we're in an uptrend compared to a downtrend, right? So be aware of that. But if it's right around the same distance, right, from your entry, stop loss, take profit, in other words, a 1-to-1, it's going to be very, very balanced, very easy for you to hit your take profit or stop loss. Now, here's what happens when you go from having a 1-to-1 to a different risk to reward, okay? What happens is, instead of having an equal distance, in other words, it being as equally easy, you have your entry, your stop loss, and then your take profit could be, let's say, up here, right? This could be a 2-to-1. This would be going from 100 to 120, your stop loss being down to 90. What happens here is, you have yourself this distance, which is about $10 or 10 points. Then you have this distance, which is $20 or 20 points, or double the size. In other words, this is a 2-to-1 risk to reward ratio. Whatever, you guys get the point, okay? So this means that it's typically going to be harder, twice as hard, to actually be hitting your take profit because there's just a larger distance. Even if you have this kind of uptrend like I showed you guys earlier, if your trade is going to be, let's say over here, entry, stop loss, and then take profit up here, it's naturally going to be more difficult for you to hit this target to the upside as opposed to potentially enduring another pullback, which could take you out of your trade and hit your stop loss. So all that to say, your win rate will naturally be higher the lower your risk to reward is. If your risk to reward is a 0.1-to-1, in other words, your, if I were to just make this example, you have your entry, and you have your stop loss, that's over here, and your take profit right here, it's obviously going to be really easy for you to hit your take profit because look, it's this close compared to your stop loss, which is all the way down there. So it's obviously going to be a lot easier for you to hit your take profit because it's a $1 move versus $10 move down for a long. My point is, whenever you have a higher win rate, your psychology is going to be better. And how do you get a higher win rate? By having a lower risk to reward. But you need to balance it out, okay? I have people, which are on my team, under my automation program where we automatically generate profits onto our clients' accounts, which have a 5-to-1 risk to reward and have a 55% win rate. What does that mean? That means that out of 10 trades that they take, well, let's say out of 100, they have 55 out of 100 which hit take profit. And whenever they hit take profit, they make 5 times what they lose. So one loss is minus $1, one win is plus $5. Now multiply that by millions of dollars of managed capital, and you have yourself a really, really good situation where you're making a lot more profit than you are whenever you're losing. But how do you get to the position where you have a 55% win rate with a 5-to-1 risk to reward? It does take a long time and a lot of refinement because you need to be very, very good at reading the markets, figuring out the ideal entry point, figuring out the ideal stop loss point that's not too far from your entry, the ideal timing so that you don't go into too much drawdown and potentially get stopped out. You ideally just go right away into profits, and then find an ideal take profit level, which is going to be 5 times the size of your stop loss. So naturally, it is going to be difficult for you to do that because it requires a shit ton of optimization backtesting. And then once you're actually live, you still need to actually be following your plan and going for the 5-to-1 and not just closing out randomly halfway through, which is something I talk about quite a lot. But anyways, hopefully that makes sense, guys. So what I was trying to say over here, another lovely tangent, is really just that it's going to be a lot better for your psychology over here to actually set a lower risk to reward. What I always say, right, in my free course and most of my content is 50% win rate at least and a 2-to-1 risk to reward ratio at least. That is your minimum, okay? Now, in terms of trade frequency, which is the other main metric that you're looking at, you're ideally going to be looking at something along the lines of a couple of trades per week. I would recommend between 2 to 5, ideally 3 to 7 or 8. 1 trade per day, which is about 5 trades a week, is a very good number, all right? And it's very easily scalable, depending on a couple of other factors like your risk to reward and win rate. Compared to like, let's say 20 trades a week, which obviously makes you a lot more money if your numbers are good, but it's also a lot more difficult to execute that consistently. So, and 2 trades per week is good, but it's just very little trades. And you could miss those trades, which means you have no trades that week, which if you had losses the past week, it'll make things even more difficult because it's been like 2 weeks since you've gotten any profits. You're down, you want to take trades, you might overtrade. You need to have some sort of sweet spot balance, which is going to give you enough trades for you to stay psychologically I guess, in tune and insane, but not too many where you're gonna go fucking crazy and create trades out of nowhere either. So there is a sweet spot, right? That's what I'm saying. 2 to 1, 50% win rate and a couple of trades per week. That is the ideal number based off of decades of experience. I obviously don't have decades. I have like 5 years of experience, but my team has decades together, right? One of my guys, James, has about 7 years of experience. One of my guys, David, has about 3 years of experience, and many, many others. So point is, we have noticed this ourselves from building strategies from scratch and from coaching people. So make sure that your back test actually aligns with your life. In other words, it needs to make sure that it's actually working with your schedule, that it's working with the kind of personality style. I'm gonna go and just add personality over here. Personality is really important because, like I said earlier, wow, I totally butchered that word. Probably not even legible. You guys get the point though. Personality is very important because if you're the type of person which is not very good with computers, if you're slow, once again, no offense, we're all different, right? It's not a bad thing or a good thing. If you're a bit slower, you want to take your time. You don't want to be constantly on the charts staring and be stressing. What I would recommend is that you avoid scalping because scalping requires you to be faster, to be more on the charts. And if you make a mistake, it could cost you a lot of money very quickly. With swing trading, it's going to be very good because you can just chill. It can take multiple days or weeks for your trades to pan out, which is good. But the problem is if you're the type of person that gets very anxious, knowing that you have risk on, you might not be able to sleep at night, right? It could be 3 a.m., you're still in bed, eyes open, staring at your charts, waiting to see what happens with your trade, and then you might just close it out because you couldn't fucking sleep. And next thing you know, the next day, it goes through your take profit, and now you feel like shit, and you start a revenge trade. Once again, you need to figure out why you are actually having these mistakes in your trading, what the main psychological triggers are within your trading so that you can avoid those, and you can make your life a lot easier. And how do you start to do that? With your back test, woohoo! Well, first with your plan and then your back test. So hopefully that makes sense, guys. So how do we take these back testing results and turn them into predictable monthly profits? Very good question, guys. Very, very good question. Well, it starts with understanding this very crucial concept because you can't just go ahead and gather a bunch of data and expect yourself to get those same results in the live markets, at least not right away. This concept that's gonna help you guys is really, really simple. It is the concept of reverse engineering. You guys heard it here first. I always talk about reverse engineering, call me the German engineer. I fucking love reverse engineering, everything in my life, because it just makes things a lot easier. It helps me actually understand how I'm going to get to certain places and makes things a lot easier on the day-to-day. What does that mean? Well, my boys, let's get right into it. So it's really as simple as this, all right? This is you, this is now. Okay, this is the present moment. This is the start, okay? From this point, you just need to figure out how you're going to make your way all the way to your goal. All right, this is the goal, your target, your dreams, whatever you're looking for, right? And your goal could be really anything. It doesn't even really matter. It could be, I'm just gonna go and use the classic example because it's an easy number, and internationally, it does give you a very, very good living standard. So the goal could be, let's say, a fat old 10K per month. Nicely drawn there. I hope you guys can see that properly. 10K a month. So how do you go from here, right, all the way over there? That's the real question. How do you actually make your way all the way over there? Well, you need to reverse engineer. So engineering would just be going from the start and then figuring out, okay, what's next here, 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 until you get to your goal. It works very well, of course, but it's more difficult to actually figure that out as opposed to reverse engineering. Now, what do I mean by reverse engineering over here? Well, in this case, you're looking to make 10K a month. How do you make 10K a month? Well, you need to figure out what kind of account size you're going to use first. That's the most important thing because, or else everything else is very difficult to calculate, at least with trading. So how do you actually make it to your goal? Well, the main thing that you're going to be looking for is figuring out how much percentage do I need to make, right? With the kind of strategy I'm looking to build and how much time on what kind of account size. So the most easy example over here would be to use a $200,000 funded account because just about every prop firm that's highly reliable like FTMO, which is now, by the way, available internationally, including the US, super cool. 200K accounts are available just about everywhere. E8 Markets is amazing. FTMO is amazing. 5%ers is amazing. I think they only have a 100K account and you scale up. There's many other prop firms as well, which are very good. And of course, there's all the futures prop firms, crypto prop firms, but E8 and FTMO, these guys are really, really legit. So 200K account, which might cost you right around 1,000 USD normally. That's like roughly what you're looking to spend for those. Could be a bit more, could be a bit less, really depends on the prop firm. 200K account, and how do you make 5% on it? Well, reverse engineer, 5%, well, you know, $10,000, I mean, on a 200K is going to be 5%. In other words, you want to make 5% 9% monthly. Now, what else do you need to be considering whenever you're doing this? Well, you need to obviously consider that there's going to be profit split. If you're using FTMO, it's going to be an 80% profit split. So how much do you need to make? Well, in this case, 6%, right? So 6% is what you're actually looking to make on a month-to-month basis. How do you make 6% per month while making sure that your trading psychology is solid? Do you have enough trades that whenever you miss them, you can still make up for it? Do you have a buffer, right? So that you're not looking for exactly 6%. You have some months where you can make a bit more. And if some months you make a little bit less, it's not the end of the world. It all averages out. Well, what I would recommend is to take this number and not necessarily double it, because you don't really need to double it in my opinion. I think you just need to up it by 50%. So overall, to make sure that you have a buffer, right? With buffer, you're gonna be looking for 9% per month. 9% per month. It's really not that hard to do. You might be thinking, holy shit, Seb, that's a hard task, right? That's a lot, considering the indices in the US stock market typically do that much every year, right? Or some of you DGens might be thinking, 9%, bro? I make that on one trade, 9R at, 9:31 a.m. EST, you know what I'm saying? Gang, gang. Okay, try to do that consistently over hundreds of trades. If you do, then hit me up in my DMs and I'll hire you. Anyways, so over here, we're looking at 200K account. It's gonna cost you about 1,000 USD, and you need to make about 9% a month. So some months you might be making less, like let's say 4%, 5%. Some months you might be making, right around that, 7, 8, 9%. And if you're making even more than that, then great, you're making even more money than you were expecting. So to make sure that you hit this, how do you get there? Well, you could be looking at, let's say, a 50% win rate as a goal. Right? Obviously, you don't know how much win rate you're going to be getting right away in your original back tests, but it is really important for you to be aiming for something, or else it'll be hard for you to even know where the fuck you're going. So this is a template. 50% win rate. Let's go and say 2-to-1 risk to reward ratio. Okay, so 9% a month, 50% win rate, 2-to-1 risk to reward ratio. Your trade frequency could be very simple. It could just be 1 trade per day. Now, obviously, you won't always be getting 1 trade per day. Some days you won't have a trade. Some days, maybe you could be taking 2 trades, but I think 1 trade per day is usually something that's very reasonable for most people to get. Now, how do you get 9% per month? Well, it could just be as simple as 9R, right? If you're going to be going for 9%, then 1R could equal 1%, which means you just need to make 9R per month. At first, the thing is, you will not be going for 1R equals 1%. If you guys are not familiar with the whole R concept, 1R equals 1 risk. So whatever your risk measurement is, 0.1%, 0.5%, 1%, 2%, that's whatever 1R is. Usually you should be tracking all your metrics in R, just so that you're thinking in mathematical terms as opposed to money, which will screw up your psychology. Point is, now 50% win rate, 2-to-1 realized risk to reward, or risk to reward ratio, 1 trade per day on average, and then 9R per month. You now have yourself a very, very, very clear path, a very clear goal. So how do you actually get there? Well, the next step is for you to actually figure out what kind of concepts, wow, very nice, concepts you're gonna be using. So you're gonna be using smart money concepts, retail concepts, indicators, you're gonna be mixing all of them. Just identify a couple of them, bring them together, and start the test. So choose your concepts, then go ahead and test them. So go to trading view, just look at the past and start to identify setups where you can actually identify, hey, look, there's an order block. Hey, look, there's a trend line. Hey, look, there's an EMA crossover, whatever it is you're looking at, right? And then start to put them together, right? Bring these concepts together so that they give you confluence and help you figure out, hey, where could I enter, stop loss, take profit? Whenever you do this, then you can start to back test. All right, back testing is when you actually gather the data. Like I said in my last video, I went over the entire logistical process of how to do this on FX Replay. So it's all explained in there, which is gonna save you a lot of time, right? So, you're studying from now, you're gonna be studying concepts, you're going to be testing the concepts, you're gonna be back testing all of them to actually gather your data. You're going to be refining, right? So it's not like you just back test and you're done. No, you start with a raw back test, which is like 10, 20 trades or just like trades over a whole month of FX Replay time, not real time. And once you've done that, then you see what you can optimize. What's your win rate? Oh, well, my win rate on my first back test of, let's say, 30 trades or 20 trades over a month, which is about 1 trade per day, since you're looking at business days, not calendar days, is going to be, let's say, 35% win rate. And I got 5R and had about 1 trade per day. Really not too bad for your first back test. What you might realize is, hey, look, in half of my trades, I actually got stopped out a bit randomly. I could have just set my stop loss a bit lower or at this point and I wouldn't have been stopped and that would have been 2R. And if I go over the data, I'll notice, hey, that'll actually give me my win rate and that'll give me the R that I need per month. So what do you need to do? Make another back test. For a test, of course, because you're still not fully sure. You take totally different trades on a totally different month and then you see this will give you your results. If it does, 50% win rate, 2-to-1 risk to reward, 1 trade per day, 9R per month. Congratulations, my friend. You're good. you manage to get results. How many times this take for you really just depends on your proficiency, on how experienced you are, and on the kind of concepts you're using, and many other things. But once you get to this, you need to do a fat ass back test, right? Not just 20 trades, not just 1 month, but you need to do ideally 200 plus trades. Like I said, I went over this in the backtesting video, but it's good for me to go over this and speak about it differently in terms of how to actually turn into profits. So now that you have all of this information, now you actually have a very good idea of what you're going to be doing next. Now that you've refined, you do a fat back test. I'm starting to run out of space. You do a fat ass back test. Once you've done your fat ass back test, you now have your data. If your data is all good, fantastic. You can go ahead and refine a little bit more from there, but you should be done refining at this point. And now it's time for you to go into the demo markets for you to make sure that it's actually going to work well. So you just go demo, all right? Demo, why do you go demo? This is forward testing. Not for months, not for years, not even for weeks. Just for maybe a week or two, max, for you to make sure that the trades that you're placing in your back test are actually applying in the live markets. You can start this like demo forward testing phase with TradingView paper trading while you are refining and while you are actually doing your fat back test, because it might take you a little bit of time to do that. And this is one way to make sure that you're actually not wasting your time. So just go ahead and make sure you do that, and it's gonna help you quite a lot. And you can start to journal while you're doing the demo phase. You should have already journaled hundreds of trades on FX Replay because it makes you do that, so you should already be an expert at journaling. I digress. Now that you've done all that, you know that you can hit 9% a month. You know that you have a 50% win rate. You know that you have 2 to 1 risk to reward per trade. You know that you have 1 trade per day, and overall you're making $9 per month with your back test over a very long sample size. So how do you actually get a 200K account? How do you actually make the profit that you need to make, let's say, 10K a month in this case? Well, it's as simple as you buy your account. Now there's different ways to go about it. You can buy a very small account. You can do larger risk looking at your winners and losers in a row. If you have multiple winners in a row per week consistently, then you should just maximum risk, full port basically, so that you can waste no time on the evaluations, and you can just go and skip to the funded stage, and then you go in with lower risk, like 0.5%, and then you'll slowly be able to get to your goal, and you're gonna be able to scale up, okay? Or you can go ahead and just buy the 200K account, if you have the funds for it and everything, buy the 200K account and start with low risk, like 1% risk per trade. If with your strategy, 50% win rate, 9% a month, 2 to 1 risk to reward, 1 trade per day, you're only getting, let's say, 5 losing trades in a row, then you can risk 1% per trade and you'll be totally fine. Because with most prop firms, you're not gonna have a maximum drawdown of any less than 8% or 10%. With FTMO, it's 10%, so you'll be chilling. You could even risk it a little bit more, like 1.5%, but I wouldn't recommend it, especially when you're starting off. Once you pass your account, just keep going with 1% or 0.5%, and you'll be chilling. Whatever maximum losses in a row you have, let's say 5, just basically double that, and that's probably what you might get in the live markets if you have any troubles with execution mistakes or with psychological mistakes. So just keep that in mind. You're probably gonna have more losers than you realize, which is why, like I said, even though you're only aiming for about 6%, you were aiming for 9% or back test, just in case you make these mistakes or miss some trades, etc. That way you're actually prepared for it and you're not like, oh my God, I totally fucked up this month, I don't know what to do. And that's mostly it, guys. And then from there, you just go ahead and trade, and now you made it to your goal. Now, you study the concepts, you test them on TradingView, you back test, you refine, you make your fat back test. Between your fat back test and demo is where you actually go through all the data and you start to figure out how much am I actually going to be making, which I'm gonna go and do right now with you guys. This is the main topic of the whole video, so it took a little bit more time to get into this, but this is time for me to actually show you guys exactly how you can figure out how long it will take for you to pass accounts, get payouts, and scale up. Now, I know what some of you are thinking. This is exactly what I need, but I want help implementing it with my results. If you want personalized guidance turning back testing data into real profits, and even getting funded up to 400K fully guaranteed within a few days so you don't have to spend weeks or months on the evaluation, you can go ahead and book a call with me. I also have a complete free course that goes deeper into the process. Both links are in the description. All right, my friends, let's go ahead and go into these specifics. So this is my favorite part because this is where you're actually able to see, look, this is the results that I had, and this is how much I'm going to be making. Now, the easiest way to do this is with an actual back test and actual data, which I could do for you guys if you want, but for now, I'm just going to go ahead and do this in this format just because I feel like it. So let's go ahead and have some fun with this, guys. Let's go ahead and look at this step by step, how you're going to actually pass this account. So you obviously need to have numbers to work with to reverse engineer. So with a 200K FTMO, now that we have it specified, you have a 10% profit target phase 1. You have a 5% profit target phase 2. So you need to make 15% total. You have also 5 minimum trading days. So I'm just gonna add this before I forget. 5 minimum trading days, something to consider. Then you also have a 5% maximum daily loss and a 10% maximum loss. So these are the general numbers. There might be a couple other things I'm forgetting. Of course, there's some rules. There's a swing count versus regular, but I digress, right? You guys get the point. These are the main numbers to be looking at. How do you actually get to these? Well, you can just go ahead and actually look at your data. In this case, obviously we don't have a fad back test over here on the whiteboard. It'd be cool if we could do that, but you know, we don't have a smart board, like shout out to school. Anyways, so let's say that you're looking at your data. You have, you know, once again, you have your 9 hour per month. You have 1 trade per day. You have 2-to-1 risk to reward per trade, 50% win rate. Let's say that with a 50% win rate, you can get, let's say 5 losers in a row. And what else do we need? Let's say on average, you're getting 2 wins in a row per week, 5 max, right? 5 maximum losers in a row, you get 2 wins in a row per week on average, right? So you do get this quite often, which is quite good. Now you have these numbers. What's really cool is you can just go ahead and actually grab your data and then throw it onto a spreadsheet. In this case, I'm just gonna make up some data with this right here. So I'm gonna go ahead and just make a long list. Let me go ahead and I'm gonna go and just start to make it over here, and hopefully we have enough space. Let's go ahead and see what happens. So you have 1 trade per day. That's gonna be 20 trades. Let's have fun with this. So you have a 50% win rate. So I'm gonna go ahead and put in 5 losers in a row. I'm gonna go ahead and put in 50% win rate. So half are gonna be winners, half are gonna be losers, 2 risk to reward. I'm gonna make it all total 9 hour per month or something very close to that. So I'm gonna go and just cut to right when I have that. Well, look at that, guys. Just like that, magically we had results appear. So I just completely randomly drew these. It actually ended up adding up pretty well to the actual win rate and the 20 total trades. Now the actual R, I'm not even sure exactly what it is. So let's go and just count it. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is actually gonna be about 10 R, right? So that's 20, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, so this actually ended up being 10 R, which is normal because it's 50% win rate with 2 R per trade, 1 trade per day. That's about 10 R, which is good. It's a little bit better than the 9 R. Some months you might have 1 extra loser, which is going to basically make it 7 R. And so you're gonna have roughly this average. This is pretty good. We can actually work with this. What's cool is, guys, once you determine R, you're able to actually figure out what this is gonna look like on a real account. So here's what happens. Awesome. This is gonna be with your FTMO. Very fun, guys. Now look, once again, you can get 5 losing trades in a row. This is where the 5 losers in a row came in. We're going to show you guys this in a little bit more depth. So you have the 5 losing trades in a row right here. This right here is something that you need to be careful of. What you can do is apply dynamic risk management, which can help you actually avoid losing accounts and basically be safer when you're in losing streaks. The problem is, whenever you do dynamic risk management, is whenever you have a situation where you have basically a winner, a loss, a winner, and a loss, just like back to back. In this case, you don't have many of these. Whenever you have a winner, a loss, over and over, it is going to mess up dynamic risk management quite often. Or at least whenever you get a winner, 2 losses, a winner, 2 losses, that's pretty much the worst. But in this case, we could do dynamic risk management. I don't think I'm gonna get into that right now because it's gonna take a little while for me to go through all this. But leave a comment or DM me if you wanna understand this more and you want me to go through this example. I'm just gonna go with a simple example with 1.5 risk per trade, 1.5%, all right? So with 1.5% risk per trade, 1 R equals 1.5%. This is going to look like this. Instead of 2R, you're gonna have 3%, right? Which in this case, right, 3%, just to be clear, is $6,000. So with your backtesting results in your first trade, you made $6,000. If it was funded, you could actually just grab that money, minus 80%, you'd be making 5,000. So that's huge. Then another 2R, which means you make another 3%. So now you're at 6 out of 10% for phase 1. But then you ended up losing 1R, so minus 1.5%. Then another loss, so minus 1.5%. Another loss, 1.5%. Like I said, guys, whenever you have 3 losing trades in a row and 2 wins, you're still up. This is minus 4.5%. This is plus 6%. You're still up 1.5%, which is amazing. Then you have this one right here, which is going to give you plus 3%. And then you're going to get a loss, which is going to be minus 1.5%. Now you have a little winning spree. You have 3 winners in a row, which is going to be 3%, 3%, and 3%. Let's go and total this up. So over here you had minus 4.5, you had 6, so you're up 1.5. Now you're up 4.5, now you're up 3, 6, 9, 12. So over here, you passed phase 1. Because we had a nice winning streak and because we're risking 1.5% per trade, you now managed to pass phase 1 of an FTMO account, whether it's a 10K, 200K, in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades with a win rate of 1, 2, 3, 4, 5, 6. So yeah, that's officially a 60% win rate, which is pretty good. Obviously a small data sample, but you passed phase 1 with a 60% win rate, just 2 risk to reward, 1.5% risk per trade. Very reasonable, and based off your data, not even possible to actually lose your account. And then you have yourself a fat losing streak. You have 5 losers in a row, which is unfortunate. What happens though is you have your phase 2 account only at 1% risk. Why do you do 1% risk with your phase 2? Because there's no reason for you to risk it. You can just go ahead and stay at 1% risk because you only need to make half the profits as before. So you can even do less risk because it's only half. So in this case over here, you would lose 5% minus 5%. I'm not going to do them all individually because you guys get the point. Then you get plus 6%. So now you're going to be up 1% on phase 2. All right. So in 1 month, you managed to not only pass phase 1 right here, which is huge, and you got 1 out of 5% on phase 2. What happens if we start a new month? So let's say this is September and now you're going to October. Well, now you have 2 more winners, right? 2 more winners means that you make plus 4%, right? That means you made 5% and you passed phase 2. So now in a month and 2 days, right, just a little bit over a month, you managed to pass phase 1 plus phase 2 of an FTMO challenge. Now all you need to do is just get a very, very small payout, 0.01%, and you get a refund of the $1,000 that you spent over here, and plus a little payout split, or a little profit split. So that's massive. Already with your data, you managed to turn it into profits, which is huge. What happens now that you continue trading on your funded account? Well, if you just do 1% risk, you would go ahead and have 3 losing trades in a row. So this would be unfortunate, right? So now that you're funded, you would go ahead and have minus 3%. Then you would have plus 2%. So yeah, in this case, you would only be down 1%, then minus 1%. And now this winning streak right here is about to make you a fuck ton of money. Let me go and show you. This is plus 6%. So in total, you have minus 4 plus 8 plus 4%. 1% equals 2,000 USD. In other words, you just made 8,000 USD. With the profit split, it's going to be like 1,600. That's like 6,400, right? 400 net. You just made 6,400 USD trading in 2 months. Very, very good if you ask me. You turned $1,000 and you flipped it 6.4x in 2 months, and you're funded 200K. That's insane. You spent 1,000 plus a bit of time to backtest and gather these results. These are very achievable and easy results to get, by the way. Just saying. Okay. You're getting. Over here, phase 1 passed with reasonable risk. Phase 2 passed, reasonable risk, even with these big losing streaks, 5 losses in a row right here. You're still chilling. Then you get funded, you get a little losing streak, then winning streak, and just like that, you made 6,400 USD net. What happens now that you're funded 200K and that you're getting roughly 10 R per month? You're making $16,000 a month because you're keeping 80%. Yeah, $16,000 a month. And of course, like I said, if you have a bad month, you'll make 6,000, 8,000, 12,000. On average, it'll balance out to the $10,000 a month you were looking for. I hope you understand now whenever I talk about opportunity cost, how bad it is. If you could make 10 R per month on a 200K funded account, which you're gonna get a refund for no matter where you are in the world, well, unless you're like in a crazy country like North Korea, right? Whether you're in the US, Canada, Europe, Asia, whatever, you're gonna be able to get a 200K FTMO account for just 1,000, get a refund. In this case, with this kind of data, make a $6,400 payout net after the profit split, and then consistently be able to make 10 to 20K a month with just this very simple strategy, which honestly would not take much refining to get to. Do you guys understand the opportunity cost now if it takes you months or years to get to this profitable stage? If you can be making $10,000 a month and it takes you 1 year to be profitable instead of just a few months, you're basically looking at 10,000 times 12. That's $120,000 you are screwing yourself over out of. Not to mention all the money you're going to be losing over the next over that whole year by not doing this properly, by blowing accounts, by not having the right data, by wasting a bunch of time. There's so much opportunity cost, it's insane. That's why when there's somebody that is available to help you, whether there's a fee or not, it's fucking worth it if they can guarantee they'll get you results in a short amount of time. That's why I fucking did that many years ago, because if I didn't, I wouldn't be here. I would not be taking trading seriously. When I paid somebody $10K to fucking help me with trading, it was a lot of money. It was very, very scary. But what was scarier is it taking years and years and years for me to become profitable and be able to change my life, my parents' life, my partner's life, everything, bro, and be able to change the fucking world at some point. So be aware of that. Just remember that. Once again, guys, you do whatever the fuck you want. It's your life. I'm just giving you the sauce. I'm giving you the information. I'm giving you a bit of wisdom. You can do whatever you want with it, all right? Like I said, I'm always open to talking to you guys in DMs. I love speaking with you guys. I want to be able to, at the very least, give you some nugget of advice, some nugget of information, something to help you so that I know that I'm able to make a difference in your life so that you can do what you want with it and make a beautiful change in the world, or even just for yourself, for your family, for your community. So there you have it. That's the complete system for taking your backtesting data and turning that into complete, predictable, consistent monthly profits. You now know how to track performance, project realistic timelines, and scale systematically from demo to funded trading. If you found this video truly helpful, hit the subscribe button and come back next week to watch an absolute banger. Now, if you've been struggling to pass prop firm challenges, watch this video next where I explain how to pass any prop firm challenge step by step.